Alrighty, y'all. We're on live. I'm waiting for some more people to get in here on TikTok and YouTube. There was no trade recap to go over today. I did go live today just to talk about trading and business in general, just to, talk about some stuff. So I did do that. We are waiting for people to get in the live. Obviously, if you're seeing this as a recap, the first few seconds or minutes are always like a little dry until people, get in the lives and stuff. But we're gonna start with, it is Saturday night, so I don't think a lot of people will be in here, but we'll just start because I should be doing this anyway. And we're gonna backtest 1 hour analysis, 1 minute execution during the 950 to 1010 macros. And since we have split screen, we really can just, we don't have to really mark up the entries we would take. We can really just really study this session. We don't have to look up, oh my God, what would happen? 950, 1010. Okay, so we can look. Okay, on the 1 hour, we have liquidity here and here. The market, we do kind of have a market structure shift on the 1 hour, but we do have some wicks, not candle close above on this last one, but we do have some here. We don't have a fair value gap besides this here that we already tapped into. So we could be looking to go higher. We have liquidity here. And then, hold on, let's not, maybe we can leave that where it is. And then we have, we do have a big one here that it really could bounce off of to go higher, which I don't like how these are so close together like this. I really don't like that. So yeah, let's just see how the market plays out. And then on the 1 minute, we want to IFEG to take it to a different opposing liquidity. So let's see what it looks like on the 1 hour, and then we're going to see what it looks like on the 5 minutes. With the 1 hour over here, 1 minute over here. But I want to wait till we get in this, 20-minute zone. So let's see what we got. Okay, we went up into the red one and wicked again, which is looking good for bearish on the 1 hour. That's looking very good to London lows. Now, we're not trading after 9:30 anymore, but this could be a trade you take. So if we're trading at 950, it might go all the way down first and then reverse for us, or hopefully we get a pullback in here to go lower. Let's see. Yes, like this. So now we want the reverse. Let's see, you really got faked out on this inverted fair value gap. That's why sometimes in the 1 minute you can get faked out because we got a strong candle close below this one right here. We were going down and it literally faked us out. But it did tap into this bearish one. But see, that's why you want to wait. We want to wait to our what? Our macro time. Because I just feel like when I trade before 9:30, 9:45, I always get faked out. So I'm trying to stick to these 20 minutes. Let's see if we can get a reversal. Now we can wait till this one is inverse. And then we swept liquidity on the hourly. So it's looking good to go lower because the next one's way up here. It could keep going higher as well just to rebalance some of this more as well. So let's just see. But we're waiting for a reversal. This is what we're waiting for, a reversal in this time frame on the 1 minute. And we did not get one. Or you can enter on this tap. So once we didn't close below this, you could have entered off this second candle here. So basically on fair value gaps like this, when it's a big one like this, we have strong imbalance to be filled. You can take this trade. You either wait for it to go down and close below it, or you take it to the upside. The next liquidity point on the hour is here. So let's see if it goes up there with a tight stop loss, because the swing low is down there, or you can have it take it to the swing low here for a little more of a risk, a little 1 to 2. Boom, that's the trade. So sometimes doing this, I get so caught up on inverting that you can play continuations off of it as well. You see what I'm saying? Because it's still a reversal, because it comes down and then it reverses from, you know, like this little mini reversal. It's not like a full reversal, but it's like a we're going higher reversal. And then it could reverse again from here, or retap into this one if it wants to go higher. We made our money, so we don't care. And see, it did. You tapped in to keep going higher. So those are like 2 entries you could have had for the day. So we have to make sure we don't get too obsessed with it being inverted always. And that's why we're trying to look on the 1 hour to see what we want to take. We did get a liquidity sweep, but that was already before we got on the chart at 8 a.m. So we had a strong wick to go higher, and then see how this is a strong 1 hour candle. So that also was a sign to get back in. See how the hour candle aligned beautifully with our entry. So even just looking at the 1 hour, once we've got this thick candle close above this high with the big candle close and a long displacement, very confident in us continuing higher. Then you can wait for a confirmation on the 1 minute. You can even get in. I mean, this candle closed really big, so it would have sucked technically to get in that high, but you could have waited for the confirmation, got in here, and took it, you know, to here, or however much further up it goes. But obviously our trade was way better than this. I mean, your stop loss would have been like here. So not as great, but still. And I mean, it's probably going higher, so you could take it, yeah, for like a 1 to 2. If you get in late, it usually will still give you a 1 to 2 and a 2.5. So you can just take it no matter where you get in at, and don't get greedy. If you get in later though, don't go for like a 1 to 4, 1 to 5 like you would have if we got in down here. Okay, maybe not 1 to 30, but even if we kept the stop loss here, like really tight, a 1 to 10, you know what I'm saying? All right, let's go to the next New York session. Okay. What do we got? Let's mark our 20. Like I said, we only want to take trades in 9:50 to 10:10. It's going to really set us up for the rest of the day, I've noticed. I mean, it's not to mean 9:50 to 10:10, but you want it after 9:50, is what I would say. After 9:50, okay, we do have a little sweepy sweep here of this high with a nice little wick, but in a candle like we're gonna go down. And then we have a bunch to rebalance. We have so much, so we can just mark this one. This is probably where it wants to go to start. Let's see, we already swept the one from yesterday. So we probably will go down, but hey, if it wants to go higher, it can go higher as well. Let's just see. Let's just see what the market gives us in these 20 minutes to play off of. Okay. I mean, we do have a fair value gap here. I mean, it's so small, so maybe not. Yeah, that was bigger than that. I'll wait for another one. Let's wait for another one. That was, okay. We did get a candle close above it though. So that's why I'm like, but I wasn't sure because we did get a wick below as well. We did get a candle close here. Your stop loss would have been, technically, you wouldn't have gotten this trade because we're not entering before. However, since it didn't close below the stop loss, it's making technically higher highs. We got a higher high, and this is a higher high. It's barely higher than this one, but it's still higher. So you could have gotten in if you wanted to here. To this liquidity point, which is not bad, 215, or you wait for this liquidity point and then you play the reversal all the way down to this fair value gap. So let's see. Usually we kind of want to wait for the liquidity sweep first, but this was a good small, like, little scalp trade if you wanted it. Okay, now that we swept liquidity, let's see if we invert this bad boy or we go higher. It could go higher, but like I said, this is a good trade. I just want to see if the other trade, this trade would be better, and then it'll be a patience thing. Because I'll get in trades like this, but I've gotten faked out on trades like this a lot. Okay, we're still trading, but it is a nice, we haven't really, it looks like it's still going higher. And this is why, I mean, boom, okay. You see what I'm saying? Like, we're on the 1 hour, you kind of want to wait for these liquidity sweeps. So, boom. We kept making new fair value gaps. So, the new one now was this one. It is, actually, let me just redraw it for y'all. It's this fair value gap here. It's tiny. And then you would have got in right when we candle closed below it, with a stop loss there. And this is the one now you can take all the way down, you can take it to just this liquidity point, that swing low we had in our first trade, which is here, this red wick, or you can take it all the way down here, or you can take it all the way down to this swing low here, which is way down there. And let's see the risk to reward. It's a 1 to 9, so I don't want to get carried away. But this is a major hourly liquidity sweep. Look at our hour candle, a long wick. Let's see how that plays out. I mean, this is still probably what, a 1 to 6, so I'm gonna just do that. Boom. Boom, boom, boom. 1 to 6 hit, and it looks like it might reverse, but it could pull back, like I said, rebalance, and then go lower. We know how markets go: zigzag up, zigzag down. You will get good moves like this, but you know, it's probably gonna go higher a little bit and then go lower for the rest of the day. But it could do that the next day too. That's why I just take my 1 to 6, 1 to 2, 1 to 3, and 1 to 6 is very good. I mean, 1 to 7.2, like, beautiful trade. So it can go down to that fair value gap tomorrow, which it looks like it might. Yeah, so it's no point of even taking that 1 to 6. And even then, say you were holding for way down here, once you got this candle, this big green candle right there, that's where you would have closed, which is still a what? A 1 to 6.3, not the 1 to 7. See what I'm saying? So you waited to see if it goes further. Once we came back and candle closed above this red candle, you just got out right there. You could have waited for any of these inverted fair value gaps, because there's a bunch. There's a red one here. Boom. Once we closed above that, you could wait for that. It would have ate some of your profits, but then you could have got back in a trade if you wanted to. Stop loss is a little big on that though, but you see you could have took it up. But I like these straight down trades like this. Beautiful trade. So technically you should wait for these liquidity sweeps first. They'll give you the bigger moves, but I mean, 1 to 2 to a 1 to 7.5. I do like that trade better, but so yeah, that would have been one of the ones where we want to wait for a liquidity sweep. So let's see. What's happening? Oh, since I'm zoomed in, it wants to not take me to the new day. Okay. Now on the 1 hour, what do we have? Kind of trading sideways. It's not looking like we might move anywhere. No real fair value gaps in here. All this got filled nicely. We do have a wick up here. And we're at all-time high. Oh, no, we're not. Okay. Next liquidity point here. if we keep going higher. So if you want it to go higher, you want it to come lower first. You know what I'm saying? You want it to come lower, sweep something, go higher. If you want it to go lower, usually want it to go up higher and then go lower. You know, that's what we want to see. So let's do 950 to 1010 again. It's been very good to us so far. So that's why when I trade now live, I'm getting on at 9:45 to only take trades during this little window. And let's see, hopefully, you know, it comes back up here. There's all these little internal ones it can take about 1 minute and 1 hour, and then you're kind of watching what the 1 hour is going to do as well. Okay, we got our liquidity sweep, but, you know, kind of far from our entry. So it gave us another one. No fair value gap. Strong wick, though, on the hourly. No market structure shift technically until we close below this swing low here or this swing low here. So let's wait for that. Or do we have a fair value gap we can use? We do have one. It's tiny, but there's still no candle close below it. So we can wait for that before the market structure shift. That's why it's not like inverted fair value gaps, because you might get a better entry than you would waiting for a market structure shift pullback. Sometimes the market structure shift will go and you'll pull back to the same gap anyway. So it really sometimes doesn't matter. So let's see, and that's when there was no fair value gap to inverse here. So after we got this candle here, this is where we would have got in, even though I don't think we're going way up here. And then this is not a good enough risk to reward for you to take it just to here. Some people do now. That's a 1 to 1.5 though. It's not that bad. Or do we get a 1 to 2? Almost. So that's not terrible. Maybe your stop loss below that candle would have been a better one, but at this point, I think you wait for either, I mean, let's see, it can go higher or we can get reversed. Okay, so we are going higher. Will it go all the way up to here, which would be very nice. Almost, not quite, but we'll take it. That's a 1 to 5. That's pretty good. So that was one of those ones where it just bounced off and continued. So you want to wait for a continuation, but see how we didn't get any confirm of we're going in the opposite direction. So even if you want to, you could have gotten in here if you're one of those people where you see this candle close above. We tried to close below 3 times, 3 times, and then we went higher. So you could have gotten there if you weren't scary. If not, you would have got in here, and then you could have closed at this swing high or took it almost to the next one. So it's a pretty good trade right there. And you got to play off of it. Yo, what up? Thank you for being in all my lives. All right, let's keep going. So higher time frame, hourly biased. And that was one where like, yeah, it was indecisive for a while, but then we got a candle close and we got in on a part of this move. So sometimes, like I said, the hourly candle won't line up. Like you'd have missed the move waiting for this candle to close, versus like that other time we traded, the candle closed right before our entry, so it would have double confirmed on the hour. I just have a passion for trading, to be honest. Same. I'm always on the chart looking at videos. I could backtest honestly longer sometimes. But right, you gotta have a passion for it, or you're not gonna sit through this and do it. Cause I have so many friends who are like, teach me how to trade. If you don't have a passion, you're not gonna sit through stuff like this. I mean, some people enjoy backtesting because it's kind of like playing a game, but to some people it's not all that. Okay, well, let's make this hour chart bigger for a second, because I don't. Okay, we did break that swing high, which was from yesterday, so I'm sure we broke through it if I just held the trade a little longer. Here's our next one, and we do have a gap right here. And it's definitely bearish. And I'm gonna extend it to the right this time. I don't feel like dragging it all the way over there. Back to where we are. Too far, okay. So on the hourly, this is what we have. We do have a fair value gap. This is one of those days where people who trade on TikTok a lot, let's not extend this one to the right this time. They want it to come down to this fair value gap and then play the reversal to the upside. That's what it's looking like. And we do have a hourly, break of structure. So you technically want it at our time to come back in here. It already came in here once, looks like. We want to come in here, maybe even tap the breaker, which I've seen happen a lot, taps a breaker, and then, or even just sweeps this liquidity here on the 1 minute and then goes higher. This is what we want to see. Will it do that? Let's see. And if not, we'll react and we'll still make money either way. I'm about to mess around with my chart colors, see if I can make some nice. Please send me a screenshot when you do, or a DM or something, or tag me in it on social media, because I think mine looks insane. But I like how mine looks, but some people hate it. When I used to record TikToks, I used to have this insane sessions indicator that was basically the background of my chart, that when I used to make videos, people hated it. Like, they'd be like, please turn off that indicator, your charts look insane. And I was like, all right, whatever, dude, don't watch my videos. But now I found a better one, the ICT sessions one, and now it's kind of starting to distract me, honestly. So okay, we got a candle close below it. It's still not in our 20-minute time frame though, so this is one of those ones. Well, this is the 9:30 candle. This is a strong play up the 9:30 candle. Even though, look, 9:30 candle, the 1 minute got a wick, but on the 9:30 candle strategy that I used to trade sometimes, this would have been one of those ones where I got trigger happy and I got in and it would have played my way. Do we get a reversal? No, but now we swept sell side liquidity, which is kind of what we wanted to go higher. So let's see if we get a reversal. Now we do have an IFVG here. Once we close above it, now if we make another one, we have to, we'll see. Boom. Now we are in buys. So that's why I said, like, now with this strategy, we don't have to get mad when we miss this, like I used to. I used to get so mad when I missed shit like that, because then you're done. Like, this person, it traded for 10 minutes and they're done. But then I've traded that strategy, the 9:30 candle, and got faked out, and most of my unprofitability came from me just like only trading the 9:30 candle like this. And it works sometimes, but let's see if we go up or we go lower. We do got a nice like wick on the hour candle too, but I almost stopped this out, but not quite. Let's see, come on, go higher. Oh, we got stopped out. So this would have been a loss, our first loss, honestly. And you could have took profit or up here, or move your stop loss to break even, and just, yeah, we swept this liquidity here if you wanted to sell right there, and or yeah, you could have just had a small gain, or you could have just moved your stop loss to break even, or moved your stop loss a little bit in profit and just have a small gain that day. And or, at this point it's reverse. It's complete back reversal at this point. So you would just, have a small stop loss and then get back in somewhere. Let's see what we would get back in at if you wanted to. I honestly don't even know. Maybe this breaker. I don't really trade breakers for my entries though. Like I'll wait for it to come and then it needs to give me like a fair value gap of sun. So that's not a bad trade. Let's see if it goes lower. Like that's something I want, like lower, lower, lower. If I'm getting back in after a loss like that, where it went my way 50%, I want a bigger move like that. So that's one of those days where the 930 people would have had a good day that day, and or you could try to play this reversal here somewhere in here, or like I said, just a small win, which a win is a win. We like a good win. Fair value gap plus a breaker aligned with it, pretty strong. That's true. And also see with the breaker on this, I guess the breaker, okay, so this was our breaker for going up. This was our breaker for going up, these orange lines. So the breaker for it going down would be, but also it'd be here. So you could have gotten in on that. I mean, that's still before our 20 minutes, so maybe not. Or you could have waited for it to come back above it and got in here. However, this is a fair value gap that we closed below, so I didn't even really note that. So that's my mistake, which happens. We still would have got a small win, or your losses would have, I mean, we had a big stop loss kind of, so you would have still got your losses on this trade. We got a breaker, and then we did have this fair value gap inversed, and it came back and retested it. So technically, in a perfect world, this is the trade. You're getting in once you retest this fair value gap, taking it to liquidity, stop loss, I don't know, above this candle for a 1 to 4. In a perfect world. Sometimes I don't see this. This is something that a very experienced trader is going to see though, no lie. Like we got the inversion, that's easy for beginners to see. This fair value gap was actually not even a gap because we marked it before this candle closed on the hour. So I marked it like before we replayed. So technically this gap doesn't even exist. So that wouldn't even help us. This is what it would look like for us. This gap was closed. This is what it looked like playing out in real time. So that gap would have been non-existent. There is a gap here on the 1 minute though that you could have used instead of that hourly one. So I guess this would be your gap to enter off of and retest. So it kind of lines up. This is our gap. It's smaller than the other one, so that's the gap to retest. But it is what it is. Either get a loss, you get a small gain, or you notice that. Next day, next New York session. Come on, 1 minute chart. You're gonna make me scoot all the way to the right. Okay, we're trading sideways. We don't really have a market structure shift on the 1 hour. It is kind of making a little head and shoulders thingy, but we don't have a market structure shift. No candle close. These are relative equal lows at this point. We're kind of trading sideways. There's liquidity up here. It's giving sideways, so it's giving just sweep one and then go the other way. So we'll mark this one for the sell side one to sweep, and then we'll mark this one for profit target, this one profit target, this one profit target. You have like equal lows here. So let's see, let's do our 10, 950 to 1010. And I want to see that trade on the yesterday recap or the previous day, because this is 2023. If you want to get in early on a confident trade like that, sometimes it's good. It is breaking your rules, so it's not good, but sometimes you break your rules and it works out for you. And if it's like breaking your rule but it's strong like it was, like it's not really a loss, but people like to say that, like, oh, if you break your rules, it's still a loss. I mean, if it's a good trade and I broke my rules, I don't consider it. If it's me just being trigger happy, then yes, I consider it a loss. Okay, we swept this liquidity. We do got candle close above, but on the 1 minute, you gotta wait for a few more candles. This is still a big move, so we'll wait for a better confirmation to go higher. See? See? We got a break. We got a fair value gap and a retest on the 1 minute for a tight stop loss. So this is one. It's too close to like really get in if you wanted to, because it's like it can reverse. Like we didn't move strong enough. However, it's so tight of a stop loss that you're like, I don't mind risking this little bit of money for. I mean, you can even take it just to here because that's the 1 to 2. You can take it to this fair value gap, the top of it. Let's see, it could reverse on us though, so you know, it is what it is. You don't know what's coming next when you're on these charts. See? I was like, it was given like, cause see on the 1 minute, even like all this could still be technically a liquidity sweep. It can move up on this line until it wants to like go below for real, and this being a small move, this tiny fair value gap wick situation was just not. I wanted to like go down a little bit, you know, break some structure, give us another swing low to break. Like this is what you really want. Like you want to candle close below this before you know what I'm saying, versus like when it gets like this small displacement. I mean, you got displacement, you got fair value gap, you got fair value gap tap, but you didn't get like a market structure shift. So you want to make sure you make some moves first to show direction. So, but that one was so tight, it's like you probably lost like what, 50, 60 bucks on that trade, so it's not like the worst. Okay, we do have now a breaker and a fair value gap, a strong displacement to the upside, and a green fair value gap to enter off of, and we tapped into it. So I think this might be a decent trade. I get scared above liquidity points. Like I like it to run up it or reverse from it a little bit first. And I know some people also trade like that, because this is still like, oh, liquidity sweep, and then like it can go against us, and then you lost 2 trades today, which is then not fun. But let's see. See? This is why when we're on a liquidity point, I just wait for it to show me it wants to reverse. Because now what do we got? A candle close below this fair value gap. And that's my 2 trades of a loss. If I lose 2 trades, I'm done. And that's why on the 1 minute you can get faked out on liquidity sweeps versus if you were on the 5 minute. Let's see. See, on the 5 minute, you wouldn't have got stopped out. It's just no fair value gaps made. It's just sideways. So that's why sometimes the 5 minute is better. And then go to the 1 minute, like maybe go to the hour to the 5 minute to the 1 minute, and maybe we can backtest that tomorrow. And then look, boom. Downtown in the earlier round. That's why it's like, if it's a major liquidity, we marked it on the hour, just wait. If it runs up, we'll let it run like halfway or something. I don't know. But this is one of those ones where the 1 minute really faked you out, because it went up twice. It went up once, came back down, went up twice, came back down, and then a third time. So you wouldn't know it would go up 3 times. This is one of those days where it just faked you out. And then you wouldn't have took this second trade, because like I said, I try to wait for IFVGs and a strong movement out of it. Or another break of structure. XRP, what about XRP? But honestly, you could have gotten a 3rd trade if you wanted to. That's not my rules though. 2 trades, I'm done. Unless it happens look at, oh, that was so beautiful. Let's mark out what that risk to reward would have been. Such a beautiful trade. That's why part of me wants to mostly focus on IFVGs. They just work better. But however, like that one time we got it for value get tapped. But look how many times we backtested this, and that one time it tapped into the fair value gap and then kept going higher, or like 2 times. So it's like those are just 2 trades you wouldn't have taken. You wouldn't have lost. You just wouldn't have taken them. You see what I'm saying? So I'm trying to get better at that, like following a rule and just no matter the move, not getting FOMO. A 1 to 4. Gorgeous. Gorgeous, gorgeous, gorgeous. Let's do one more. Because it is Saturday night. Oh, my computer's not plugged in. It's like about to die. One more New York session. I mean, I'm not going out tonight. I was, but it's raining here and I was going to a rooftop. Okay, so we have strong wicks to the upside on the hourly. And we swept this liquidity. We have a bunch of wicks. Wicks, 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 wicks. Like I said, I don't like to go in with the bias, but it is looking good for some buys. Do you have any we have for value gap or anything that we came into? No. Now if we go down, we do have all these. Actually, let me take off this because this was already swept. You don't want to confuse yourself when you're setting take profit targets, because you put that as one of your take profit targets and it's not a point of liquidity, you're gonna be sick. You're gonna be sick. Okay. 9.50 to 10.10. So basically that's what this is supposed to be the time for reversals too, just so you know. Like, yes, some continuation plays have happened, and or like you saw that day where it came back into our fair value gap after it inversed it and then gave us an entry to go back down. So you would have basically played that like big, like I played the buy, which was a decent sized trade, but it wasn't a full trade, but it was a big move up to reverse from. So that's why like sometimes we get those big continuation reversals, which again, that's more of an experienced trader thing to see and notice all the time, but we're gonna note that, so eventually in a year or two we'll know how to catch those all the time. No liquidity sweep yet, even though we swept technically these internal ones, but we want to maybe wait for one of these major ones. Okay, do we get any IFEGs? No. We don't have nothing yet. So I guess we will be waiting. We do get a regular fair value gap with a fair value gap tap that did give us a little market structure shift. This is not that strong to me. However, this is one you would take just to opposing liquidity, like not any of the blue lines. It'd be something like that for a 1 to 3. Let's see. Boom. And it actually does go to a blue line and it doesn't stop us out. So that we didn't get our reversal in our 20-minute time frame, but we did get a market structure shift, an old regular ICT market structure shift, internal liquidity sweep. And this is why I like the 1 minute. Besides getting faked out, you can just trade liquidity to liquidity. Like once we swept here, you could have gotten sells to here. We swept that. You could have gotten buys to this one. Like you can just trade like side to side. You know what I'm saying? So that was a good trade. And that's how we do it. So tomorrow we're gonna I think we're gonna back to the same thing. We got faked out once, okay, and then one day we took 2 losses, and then another day we took 2 losses. But other than that, this strategy works. So you try to let the market tell you where it wants to go. You see, you could wait for this liquidity sweep technically, because we didn't. That was our hourly one. We didn't get any hourly liquidity sweeps in our time frame. However, that is still a good market shift trade. And then now we swept liquidity. We do have an inverted fair value gap here. If you waited for this, this is the trade. And then take it to the other side. But I do feel like we got a good move to the upside. But so like I said, we got our money, we got back in. It is a nice wick on the 1 hour. Let's see if it goes to the other side. No, we got stopped out. So sometimes this is already a big move. So I feel like, and that's the thing about this time frame and time zone. This usually is the trade of the day lately. Like in the summer session, it has been. Like some people will trade this, and then the 2 p.m. silver bullet session, you want it to reverse. Which it still can, and it usually does. It's not as far, but the 10 a.m. this trade should take you in the same direction up until 2 p.m. So this was what we got in at I marked these so badly, actually. This is not 10. This was until 10:10. You would get in here and you'd ride it up for a while. So this IFVG wouldn't be that valid because you'd still be strong in your bullish bias. But again, that's why I take profits at liquidity points, because none of that matters. If I wouldn't got faked out on this because I'd be off the chart already. I would have made my money and got off the chart. That's the good part about it. And the candle, that's why the 1 hour candle sometimes is scary to watch in real time, because you saw we had a wick at one point and now we're still going and it's closing above. So, and now we have a wick now, but we still can go higher to close above. Who knows? It can now go down from this one. And no, it didn't. You see what I'm saying? Like, you see it look like a wick, but when you're watching it in real time, you don't know what it's going to do. But it did pull back for us to get in again at this breaker, and we got a fair value gap. And you got a red fair value gap, a small one to inverse off of to go higher. So that's it. So we'll just keep back testing this, and then I'll be live trading this on Monday morning, waiting for 9:50 until I get in a trade, and then looking at the hour time frame to see kind of just where the main liquidity points are, and then just reacting off what happens. Market structure shift, fair value gap, came back and tapped it. Beautiful trade. Sometimes I get I let these pass me by sometimes, but on the 1 minute on I have my fair value gaps like this, so you'll see it. I'll see it, and then I can mark it and then turn off the indicator. But yeah, y'all have a good Saturday night, and we'll do this again tomorrow. Maybe 1 hour analysis, 5-minute execution in the same 20 minutes, because we haven't done any 5-minute back testing on this macros. I feel like it's a little scary. I just feel like, yeah, because macros are only 20 minutes, so this is scary to me. Like, I wouldn't know when to enter on this. Maybe we go 5 minutes to 1 minute. Maybe, because in 5 minute, your entry would have been later. It would have been like way up here. So maybe not. Let's just stick to 1 minute, and we'll just keep back testing this tomorrow and get better at seeing the market structure shift and guessing the market. And you have to have a passion for guessing the market, even though people love telling you that. Like, you cannot guess the market. You should not be guessing the market. No one can beat the market time and time again. That's what all the old people who tell you just to invest in the S&P 500 every year, make 10% tell you, but people do guess the market. It's still a 1% of people, but people do it now all the time and make a bunch of money from it. So don't let those people fool you. Those people want you to stay broke and only make 10% a year, which is good. I would suggest investing. It's what let me buy a house. It's what let me retire and come to Mexico at 29, but it didn't make me rich. I'm not rich by any means. I just don't work anymore and live a normal life for now. Trading, though, is going to make me rich. So, yeah, I'll see y'all tomorrow, and we'll back test the same thing.